Good morning. I'm going to start right now, Paul. Okay, so I think things are starting to look a little better. I'm certainly not confident that this market can break out of this trading range that it's been in to make new all-time highs. It is certainly close enough that it wouldn't be a big deal, meaning it wouldn't be a very big move. But, the bonds here, or interest rates moving up, I got TBT up here, which is the inverse, so yields versus the bonds that we look at each morning, the bond futures, which are moving down here. They were down just over a point a little while ago, but you can see TBT breaking out here. And, a week or so ago, last week, probably, maybe the week before, we looked at and spoke about the improvement in the yield curve that was troubling the market and the recession fears and so on. We still got this China thing lurking. Who knows? And now, there's this uncertainty about the Fed, whether they're actually going to lower interest rates, which appeared to be almost a 100% certainty not long ago. So maybe, if the market always likes them to do that, of course, but maybe it's not a bad thing if they don't, considering the yield curve. I really don't know. There's just so many moving parts when markets are uncertain like this, and in a trading range, it just makes it difficult, and why we look at so many things versus if prices are trending up in a very steady fashion or down, there's little doubt as to the continuation of the direction of prices versus being in a trading range. And so we'll see how this goes. But we've got yields pushing up here above the highs. We can see the little W bottom down here. So technically, it certainly makes sense what we're seeing on this 60-minute chart here, that it should be moving up. In the daily chart, you can see a little more detail of that W. And now this little sideways consolidation after the run up and taking out the high is bullish, which suggests continuation. And if this is going to continue up, well, that is going to continue to alleviate those fears of recession. And if you look at the yields over here now, and just look at the 3-month, which is beginning to perk up here just slightly, which is to suggest that maybe the markets are beginning to think that the Fed won't lower interest rates. Otherwise, why would this be starting to inch up? It could just be because it's oversold, looking at the weekly chart, and technically it's going to bounce, but let's, something to consider. And just looking at what the yield is here, it's still above the 5-year, but now the 10-year, you see at 1.7, is above that. And of course, the 30-year has been above, and that is this chart that we've looked at in the past. And down here, where we saw it just kind of peekabooed under inversion, this was the last holdout at the time, you could see the huge improvement that has occurred. So those fears of recession, according to the charts that we're looking at here, have dissipated tremendously. So that's one worry off the table, which maybe means this China thing isn't, it doesn't seem to be the as big a concern as it was, but it's in the news every day nonetheless. Okay, so we'll take a look at the markets, and let's just look at, this Russell, which has been the laggard, and you could see that how it has come off of the low. So we've got improvements there, and it's actually up a bit this morning with the other markets. And the transports, huge improvement there. While it was at this time when the markets ran up to the top of the trading range, this was the biggest percentage gainer of the broader markets that particular week. And now, it doesn't move much pre-market, but nonetheless, still the trading range here. And, maybe it continues to go up. So continued signs of improvement. We'll see how far these all get, but still, trading range here. We'll see if they can break out of the range. And then from there, if it does, okay, where's it going to go? How much higher can the markets go? Well, no one knows, well, there's a lot of opinions and speculations, but at new all-time highs, there's no price resistance. So taking a look here, well, diamonds, that's a bad tick. That's not real. Getting clobbered, the Dow getting clobbered with Boeing, which is down some more. So the Dow will continue to underperform the other markets because of that. So this was the worst looking at the end of the day on Friday, closing down near the low with Boeing down, American Express was down. There was something else that was down quite a bit. Johnson & Johnson, which had gapped lower. So that was the worst looking. The SPX, which we look at here, you can see that recovered. And one of the comments in the green room that I made when these markets were at the low, and I said that to throw the idea out there to keep everybody open-minded about it, because when you see any stock or index down at the bottom of a wider range red bar like that, it's hard to imagine it can turn into a bottoming tail bar. But as technical traders, especially intraday traders, you got to be open-minded about that. And while it's less likely, the further you get into the end of the day, the less likely it is that there can be a recovery. Normal, but at around 12, just before 12:30, things got a little climactic with a high or negative tick reading, and things began to bounce, and we had that nice trade in Roku during that midday lunch period with that climactic buy setup. Turned out very nice, but the markets did recover. So the SPX erased almost half of its loss, and if we look at the Russell, it turned into a bottoming tail bar. So while it couldn't become a green candle body, trade close above its open, that was pretty impressive to turn around from that sell-off, which was, pretty powerful to the downside early in the morning. So that was a pretty good recovery, especially on a Friday. So that was another positive for the markets. And as already mentioned, the markets are up here pre-market. Qs, to a lesser degree, they came off of the low, but technology could be the fly in the ointment of this improvement, which has been lagging. And they kind of is just chopping around sideways. As we look at that, you see the technology ETF is just a mess, but this was quite a bit more to the downside than some other markets. And software, which needs to get turned around here. You see this head and shoulders formation on the weekly chart. So if this can actually turn, we can get a green week this week, that is going to be a huge positive to see the technology sector begin to turn more bullishly. Breaks down below here, I don't think the markets can hold up, and they go back down to the lows. And semiconductors, just been really choppy and sloppy. You can see the daily chart. They came back more so, but if they can get turned around and we get a positive week, I think that's going to go a long way to possibly seeing this end of year rally that I think many of us are expecting, just because it typically happens. But from what point maybe isn't so easy to pinpoint from year to year, and this year certainly hasn't been so easy. Looking at the futures, the ES here, chopping around. That's what I wrote about in the advisory letter this week, that as sloppy as things are in trading ranges, for the moment, this price action, even with, Friday, the morning sell-off, and there was the recovery, this kind of sideways price action at the top of this bar here, which was a pretty powerful rally day, I think it was last Tuesday, is bullish to go sideways in the face of this resistance over here. So while it's not breaking out, it's what we call acting well. Right? What does acting well mean by definition? It means that it's not going down after a a pretty strong run off of the low into resistance, and sellers that are stepping up here, well, they're being met by demand. And that's what this bottoming tail bar is telling us. So as we look at price action and then include the concept of bar by bar analysis and the location of where it is, it gives us great information, what I like to call objective information versus us possibly, wishing for something to happen based on the bets that we've placed. Nasdaq, I was already mentioned, the weaker, but chopping around here. So it's the beginning of the day, of course. We're talking pre-market. This could turn into a red bar, but let's see. So far, the drop that we saw, prices are recovering. And when, where they are at this point in time is going to become a little bit more difficult. The closer you get to resistance, the more difficult it is to continue to rally. Nonetheless, we do have a void here. Part of our concepts that we look at, get my drawing tool out here, is that this area here, prices traded up to it already, traded below here, and this nasty little drop that occurred created this void. So right now, prices are just grinding up into it, and there isn't much to stop it from going up here. It doesn't mean it can make it. So we just continue to watch the bars that form bar by bar into here to see if a bearish pattern forms. This was a vertical move to the downside, which is powerful, but this is retracing quite a bit of that. And it's kind of really at the moment of truth point here as to whether it can continue, because it's those that want to sell, this is going to be the area where they're going to focus on to do it. All right. YM, which we know, even with Boeing, it's actually up here, but just going sideways at the bottom of this range here. So obviously, just looking at the chart, not as bullish and more susceptible to breaking to the downside. Now, the weekly chart doesn't look so bad. Now, if it trades down below here, that opens up the door to what we call a measured move lower. And I can show you one that we looked at a few weeks ago. I believe it was in Bitcoin, where we talked about this consolidation here. If it didn't continue higher, it was going to break to the downside, and now it's beginning to stabilize down here. So we'll see what happens with that. And Russell futures continuing to show improvement and leading off of the bottom here, but coming up to what should be a stiffer area of resistance, the top of these overlapping candle bodies up here. So we'll see what the reaction is there. I don't think it's going to be an easy go here this morning with the markets. Certainly a lot more earnings coming out this week. Nonetheless, I think the theme here is that things are improving, and we'll see how things unfold during the week with earnings and news and such. But a lot of improvements from what they were a relatively short period of time ago. Oil just doing absolutely nothing here. Just can't seem to get it going off of the bottom here. So I don't know what that's going to do. Just better to stay away. Bonds we already looked at. I think we did anyway. They're down. I mentioned they were down. So far, they're holding in the area of that bottoming tail bar. So intraday, we want to see if they continue to drop here, and you can watch TBT to see if it's going up, or TLT, which is the ETF for prices. If they continue to go down, that should be supportive of equities continuing to push higher. Gold. In the letter, I talked about whether this is the place where this is going to start to move up. Technically, I was looking possibly for a retest, maybe a little bit lower, but this is what we call a bullish type of flag, more so right in this area, and this little sloping downward move to this part of the breakout area. So it's acting well here. We've been watching this for a while. Just the monthly chart, just to review those that aren't aware, it broke out of a multi-year trading range. So we got a bullish breakout here with a void above. And so we're looking for the the setup, which is pretty darn close, even if it comes down to retest one more time, this is the area, right, where it's at here. In this area here is where we should want to be a buyer. So, and you can look at GLD if you don't, rather than the futures. And you can see similar patterns there. The gold miners, GDX. So GDXJ, if you want the leverage, you could look at those. Silver, right, looking a little bit better, right, but similar pattern on the weekly chart. So as I said, a lot of improvements. Software, a concern. Technology, concern. Internet, a concern. Right, you can see now moving lower on the weekly time frame and a downtrend up against resistance on the daily. We've got Amazon reporting. We've got Snap reporting, Twitter reporting this week. I believe it's on Thursday. So a lot of things to watch. Like I said, there's been improvement, but any one of these concerns, whether it's Amazon not reporting good earnings, oh my gosh, right? Twitter, probably not so big a deal. China, impeachment. So Mr. Schizophrenic is still lurking out there in this market. So be careful. There have been some nasty surprises that have popped their heads. And so trading a little smaller certainly makes a whole lot more sense. All yours, Dan.
All right, thanks. Good morning.
Yes, NQ could be a setup, Tony. We'll be watching this during the trading day.
Yeah, when I was looking at the markets over the weekend, actually, other than the diamonds that had the uglier daily bar, the other ones were fine. You know, 2-bar pullback to support here. I said in the video, you know, provided we don't go much lower. And now with the gap up, bullish pre-market, my bias is higher here. Man, we'll see. All right, let's look at opens first, and then there's a lot of gappers. We actually only have 2 opens now in the weekly. We had a lot last week, but a lot of them expired and trail stopped out. So Google, we have a put spread for Friday, MA. We have a bear call credit spread, the 280, 285. In the weekly, we had a condor, but the put side stopped out on that breakout failure. The advisory letter deck, we are long stock. EVBG, a long stock. You can add over last week's high. FL is a core trade on the beautiful reverse head and shoulders on the weekly. Home Depot, we have a covered call. That looks great. HFC, long stock, and you can add over Thursday's high. That's a nice 1, 2, 3. IRT, we're just in trail mode. That looks great. Jable, we have a covered call as a core trade. Kim, long stock, core trade. LGIH, housing stock, we got a put spread. NVIDIA, covered call, core trade. We have a lot of cores actually. So we shorted the 197.5s up here for Friday. It's getting a nice gap and pre-market move there. PDD, long stock. SITC, long stock, another core trade. Velo, another core trade, looks great. And that one's a covered call. It has earnings this week, so we legged into a covered call. WLH. I guess lost my chat box for some reason. That's weird. So Greg, very strange. My chat box just disappeared. It still says sharing the screen though. I might have to log off and back on.
Why don't you just click the chat thing at the bottom and see if it comes back?
Okay, there it is. Thank you. All right, let me see what I got. All right, so I'm sharing this. All right, as long as you all can see it. So I'm now done with all opens. So let's now look at this. Yeah, I don't trade in this account, Richard, so I guess that doesn't matter. Yeah, no, this is TradeStation. I just got 500 bucks in there just to open the account and get free software. But I trade on TD, TOS. All right, gappers here. Little penny stock toy. You know what? I told you all, I'll trade penny stocks if I get a good setup with clean bars. This one possibly could. If you get a double bottom, we'll take a look at that in 30 minutes. Another penny stock toy. Look at this. This looks like a total pump and dumper. Look at these whips. Look here on the monthly. Went from $1.26. McGraw said that this one has unusual call activity. And it's kind of a reverse head and shoulders McGraw over last week's high. It looks fine. That's a Berkshire B class. SAP had earnings, 132, big gap. I don't like ADRs, so I got no interest. KWR. Gap in a 159. It's a bearish gap, but no pattern. We'll come back to it. Nick, and do me a favor, put your drop down to all panelists and attendees. But next question is, when I mention core trades, is it possible to buy options? And the answer, Nick, whenever we give a directional trade, whether it's swing or core, then it qualifies for you to buy options, sure. But if I don't recommend options, then it's typically, because we like buying in the monies, like 80 delta or higher, and it was too illiquid. And then also for core trades, I personally don't, the furthest I'll go out on buying options is 90 days. Because, you know, beyond that, they just don't move properly the longer the time to expiration. All right, ONB, 18 bucks. Bullish gap to resistance. Hey, Debbie, I'm noticing Boeing here, pre-market. Just made a new low. Look at that. That's just nasty selling. Look at that. That is being dumped. Look, it's 332 and change. It looks like it's definitely going somewhere deeper into this area. And the monthly, if it didn't have these tails right here, so let's just say the neckline was more up here, then this would be a nasty head and shoulders. Where why couldn't it go to 250? Look at this as a price void. This momentum move. Wow, and I remember doing some chart lessons around here. I remember one day it had earnings. It went from 150 to 160. And the option sellers, I remember were saying, oh, that's a big $10 move. Let's sell bear call credit spreads. Well, they surely got run over on that. All right, pits, 23 bucks. It could be a long-term bottom. You know, not a great, it's not a good core to me because of all this sideways mess here. But bullish gap, LII, 251, gapping down but no pattern. Halliburton had earnings, gapping down a little bit, no pattern. I had one little oil stock I was contemplating putting in the letter. I think it's COG. So Imphy here is having a nasty, wow, $9. Look on the weekly. Wow, that's an ugly gap. Yeah, look at COG. If COG can get over last week's high, it has room. KMT, 29 bucks. That's a bearish gap, but there's all this support below. Roku down a bit, 129. It was down more earlier, but no pattern. Yandex 3250. It's a bullish gap over all this. That might give you a day trade long. Let's put that here. That's worth watching. This not asbestos, the opioid crisis. They were set to start that trial today, and they settled. So some of those companies are moving, like a Teva was in there. Teva was down 50 cents, and now it, recovered on the news. So I guess, the market's pricing in the settlement value versus what, the expectation. That's how news works. SGen, big old gap, nothing to do. ENDP, nice weekly breakout on volume.